With the popularity of Bitcoin and cryptocurrency now hitting the mainstream media again, many people are going to be looking at how can they get involved with cryptocurrency. So I have no doubt that Bitcoin and cryptocurrency is going to be the topic of conversation once again as we approach the holiday season. So the granddaddy Bitcoin was first released January of 2009. And when it was first released, there wasn't a ton of interest, and for the most part, it was largely just ignored and looked at as a good idea. Early speculators definitely saw the potential in Bitcoin, but it really didn't draw much interest or investment in the early stages. So as the years have passed, hundreds or even thousands of different types of cryptocurrencies have come and gone, but time and time again, Bitcoin has proved to be the standard bearer for cryptocurrency. Almost think of it as some of the top companies in the stock market, like Apple or Amazon. They are essentially the blue chips, the top tech companies in the world. So I would almost look at Bitcoin as the metric that everyone else is trying to chase. As any investment carries significant risk, today's video is not meant to be an endorsement on cryptocurrency. It's very much education on how you can get yourself educated enough to participate in the cryptocurrency market, should you choose so. So without any super complicated lingo, let's go ahead and just establish what in the world is a cryptocurrency. All right, so to be completely honest and transparent, I had no clue what cryptocurrency was. I had no real desire to learn too much about it, as I thought it was just something made up in thin air. Really didn't carry any weight or any value. But as time has gone on, I'm starting to see the significance and the importance of it. So without any super complicated lingo, let's go ahead and establish what in the world is a cryptocurrency. So cryptocurrency at its most simplest form is based on blockchain technology, where not one single institution controls the information or the data. And it works as a record of digital transactions that are independent of central banks. Now, I'm sure there's a ton of people out there that are way smarter than me that have PhDs in this thing, but at its simplest form, this is all you need to know. It's simply a digital asset that's used as a medium of exchange. And so a virtual currency can be used to purchase both goods and services. And so now you're starting to see more and more mass adoption by merchants, by payment processors. You've seen things come out on PayPal, which kind of helped spark this most recent run. Square has been an adopter of it. You can purchase it through Cash App. So there's a lot of new adoption going on right in front of our faces. So Bitcoin is obviously the most popular cryptocurrency, which is tracked by all the major financial media. But there are actually hundreds, if not thousands, of other cryptocurrencies. And so some of the other top coins, just based on pure market cap, include Ethereum, Ripple, and Chainlink. And there's a ton of them out there, but those are also ones that are carrying some pretty significant market capitalization. So now that we have a baseline understanding of what cryptocurrency is, let's take a look at the next step, which is having risk capital available. So you'll need to decide in advance how much capital you're going to allocate to the crypto space. But whatever you do, you want to make sure that you can stomach some pretty serious volatility in the price of the actual currency. So during this last run, if you bought during the hype craze when Bitcoin hit that 20,000 area, you literally had to wait almost 3 years to break even, which is where we are at right now at a point in time. So, if you're okay with holding something for that long and not even in the money, then, you want to make sure that the amount of capital you have at play won't actually hurt your pockets. Now, the next step is you want to identify which cryptocurrency you want to invest in. So similar to the stock market, there are a ton of different companies that you can invest in. So in the crypto space, how in the world do you identify which cryptocurrency you would like to be a part of? Given Bitcoin's dominant position, it is drawing the most attention and it is drawing the most significant investment dollars from the big banks and investment institutions. In a very distant second place, you got things like Ethereum and then Zcash, Dash, Ripple, Monero. There's a lot of other ones that are rounding out the top 10. So given their dominant position, those top 10 coins, for early investment dollars, it probably makes sense for you to participate in one of those top 10 as they carry the most weight in the market. But very much like a brokerage account for stocks, you want to also identify a platform to trade and hold your coins. And one of the disadvantages for crypto is that you can't get all the coins in the usual places. Like in the stock market, you literally can log online. Doesn't matter if you're at, let's say, E-Trade, Fidelity, or Schwab. You can trade all the same stocks and they're available at all the institutions. But in cryptocurrency, that is actually not the case. For the most part, you're limited to buying, selling, and holding cryptocurrencies on specific exchanges. Now, some of the larger, more popular exchanges, to name a few, include Coinbase, Binance, Robinhood, Kraken. The list goes on, but those are probably the top 4, top 5 in terms of active trading volume. Now, most of the top 3 brokers are going to have a lot of these cryptocurrencies available, but when you are conducting your investment or trading on the buying and selling of these cryptocurrencies, you can expect to pay a commission. Robinhood, the known market disruptor, does offer cryptocurrency trading commission free. However, they have a limited offering. And so that is very similar to like Cash App and a couple other places where you can access Bitcoin without any commission, but there is a limited coin offering. Now, if you don't want to go that route, you can actually go a different route, and that is through the stock market and invest in a Bitcoin ETF known as the Grayscale Bitcoin Trust, and the ticker symbol is GBTC, which is a Bitcoin-based ETF. So this is a good choice for investors who want to trade Bitcoin on the stock market, but one of the downsides is that you will pay a premium to the price of Bitcoin. So the net asset value of this Grayscale product does trade at a premium to Bitcoin. But I do think it's still a good positive in that it allows investors to have access to Bitcoin through the stock market without having to go through all that other stuff, and you get exposure to the price movements in Bitcoin. So now on to what is your tax compliance and reporting requirements as you embark on your cryptocurrency journey. Now, most people think that there is only one type of transaction that you need to report for tax purposes, but I'm happy to report that there are actually 6 different types of transactions that you actually have to report as it relates to your cryptocurrency related activities. So a cryptocurrency coin position held less than 12 months is going to be subject to short-term ordinary income tax rates. And so that is going to be based on your ordinary income tax bracket. So if you held a coin less than 12 months, that is subject to short-term capital gains tax. And on the flip side, if it is held longer than 12 months, then it's subject to long-term capital gains tax. And depending on your tax bracket, you're going to pay 0, 15, or 20% long-term capital gains tax rate. So now let's look at those 6 different types of transactions that you actually have to pay income tax on. All right, so number 1, let's just assume you bought and then you sold Bitcoin. Now that is reportable on Form 8949. And so basically that transaction is I took US dollars, I bought Bitcoin, and then I sold the Bitcoin back to US dollars, and that is a reportable transaction. Number 2, coin-to-coin transactions. So this one, a lot of people don't know that you actually have to report. So let's just say you took USD and you bought Bitcoin, and then you sold Bitcoin to buy Ripple, and then you held Ripple for 12 months. Well, when you sell that Bitcoin to buy Ripple, you've essentially closed that first transaction out, which is reportable for tax purposes. Number 3 is going to be mining operations. So I do know some people that do mine Bitcoin. And so if you have these rigs where you're mining coins and you're earning coins, for this operation, you're actually going to report income on your tax return based on the fair market value of the coin on the date it was awarded. Number 4 is going to be master node owner. So if you own a master node where basically you have an ownership and you earn rewards based on your ownership, almost think of this like dividend type income. It's going to be treated as other income at fair market values. Number 5 is going to be receiving cryptocurrency through a hard fork. So a hard fork occurs when a cryptocurrency is split into 2 separate cryptocurrency or is bifurcated. Now this is taxable at the fair market value based on the date you actually received the hard fork. And so number 6 is going to be payment for goods and services. So if you received Bitcoin or cryptocurrency for performing goods or services, this is actually included as income or gross income, and you were going to report this based on the fair market value of the date that you actually received payment for those goods and services. So if you're an online merchant, maybe you perform a service and you decided to start accepting cryptocurrency payments, and in these situations, you're actually going to have to claim that income. So next up, we're going to be talking about storage. And so your cryptocurrency coins are typically stored in a wallet or a digital type wallet. And so a wallet is a software program that stores your public and private keys that actually connect you to the blockchain where your coins are stored. Now the wallets don't actually store your cryptocurrency, but what they do is they allow you to access it using your public key where it is stored on the blockchain. And to execute a transaction, remember you need both a public and a private key for that transaction to go through. Now there are many different types of wallets, to include a desktop wallet, which is typically stored on your computer. Now you've got an online wallet, which is stored in the cloud. You've got a mobile wallet, which is basically on your smartphone. And then you've also got a hardware wallet, which is basically like a USB drive. Like I know me, for an example, I have a nano ledger where I store my keys on that specific nano ledger. So depending on how secure you want to go is, what type of wallet you're going to choose. But me personally, I think the most secure is going to be that hardware wallet. It's because it's not actually sitting on a device. It is physically disconnected from the internet. So is Bitcoin a good investment? It is yet to be seen if this is a good investment, because if you ask somebody who got in 4 years ago, it's an amazing investment. Now, anybody who is adopting from this point forward, it is yet to be seen. Are we going to 100,000 or are we going back to 5,000? It is yet to be seen. But what I do know is that as an investor in other markets, entry is everything. And so a lot of times when you participate in something, you don't want to buy when everyone else wants to buy. You want to buy when everyone else is fearful and they're selling, while you're able to participate or capitalize on that psychological move by a lot of different investors. The other thing I know about Bitcoin is that there are a lot of people underwater right now that are just now breaking even. So if we are able to eclipse all-time highs and continue the momentum, then maybe we continue trekking higher, because a lot of times when a breakout is clean, you get a follow-through move. Now, if you attempt a breakout and, let's just say you stuff, or in technical terms, that breakout is stuffed, then sometimes there's a sell-off. So right now, we just tested all-time highs and now we're selling back again. So who knows how far this dip can go? But what I do know is that anytime you want to participate in an investment, it is always very risky, and entry and risk is everything. And that is what is going to keep you safe. Ideally, you learned a thing or two about the cryptocurrency market and how you can get involved, what your reporting requirements are, and how you can keep your crypto safe. If you found value in today's video, don't forget to hit that like button. And I sincerely wish you guys the best of luck on your investing journey. Have a good one.